Hello everyone, this is day 14 of this journey of mine where I basically bring you guys along for the ride as I try and improve myself. And so today I'm going to be covering how crypto is basically going to make me rich and how I'm going to get rich off of crypto. So while that is a bit of a hyperbole, I don't mean that while I don't mean it in a literal sense, it's still going to be a wealth accumulation phase for me because I'm still in my teens and obviously I don't have money to start off with. So my wealth accumulation is going to be a bit of a slower process. But yeah, this is going to be beginnings, and this is basically how I'm going to exit as the bull market comes to a close. And so this is sort of a follow-up to the last video. So if you haven't watched that last video where I talk about how Bitcoin is basically the perfect sort of money, better than silver, better than gold, better than the fiat currency system that we currently have with the US dollar and Aussie dollar. And yeah, that's what last video was about, and this video is sort of building off of that. And so before we talk about how I'm going to actually take profits, we first have to acknowledge that I still do believe this operates under the assumption that the Bitcoin bull market is not yet over, so that there are still profits ahead and that the price action is still undervalued right now. And yeah, I feel like this is a pretty sure judgment that most people agree with, mostly because of the strong technical analysis and the strong fundamental analysis that's come from decreasing supply, way more institutional adoption, and Metcalfe's law, which I talked about in the previous episode. So yeah, so that's the assumption that we're going to be operating off of today. And while this is not financial advice, I hope that this becomes some sort of education for you guys and that you hopefully take some tips that I've learned from learning from other people. And yeah, first off, we have DCAing out and DCAing in and DCAing out. So as we approach this end run of the bull market, I made sure I was accumulating in times of fear. So because Bitcoin is so volatile, it actually is better because you get to buy when others are fearful and sell when others are greedy. So I've been basically using the opportunity to buy all those dips and so bring my cost basis lower. And so that'll hopefully make my portfolio be easier, like put into profit. And so while you DCA in, there's also something called DCAing out. And so as this bull market comes to close, which I dubiously speculate that will be in Q2 or Q3 of this year, as this happens, I will be slowly taking money, a percentage out, as we hit those milestones as we go up. And so in this way, I will be locking my profits and taking risk off the table. And so how this works is that you want to basically start off with maybe 10% and then go to 30 and then 40%, or go from 10 to 20 to 30 and then to 40. And then these check marks will be at different places so maybe Bitcoin 2x's and then you take, or this is just very optimistic speculation. So it 1.5x's and then you take away 10%, 2x's, 20%, 3x's, 30%, and then do that as you go up until your portfolio is zero and that you have everything in cash. And so what this does is you're basically ensuring that you're taking profits and making sure that you're locking in those gains and realizing them, because the last thing you want is for your profits to go all the way up and then come crashing back down, right? So that's the sort of concept about DCAing out. And what multiples you take out in are obviously dependent on your risk level. So for me, I'm quite low risk, so I'm happy with waiting until maybe higher multiples occur, which they might not, which is sort of the trade-off. That since I'm low risk, I'm able to wait for a bit longer before I DCA out. And so I might make more profits or I might lose more, but because my risk is so low that I'm willing to take that option of high risk. So, high risk, sorry, not low risk. And so, yeah, it depends on your risk level. If you have a really low risk level and you're not very risk tolerant, then what you want to do is probably DCA out very much before the end of the bull market. So hopefully still taking a big chunk out of the middle of the very top and the very bottom. So locking in that middle sort of profit, but obviously not overstepping your boundaries and losing a lot. if you're dependent on that money, right? And so that's DCAing out. And basically what this requires is, this is my basically main thesis, and that it requires a lot of patience, so it requires a lot of discipline, that you make sure that you're always taking that amount. So whenever you get, it's like that euphoric high whenever everyone's happy and everyone's profits are going up, you want to be that person that sells. So you don't want to be that person that leaves their bags there for other people to take. So you want to be the first one to start taking profits, right? And don't get caught up in the euphoria that's going around. So maybe block yourself out of crypto news or other crypto YouTubers, and only focus on the hard fundamentals and the hard truth of what the market is in right now, and set yourself realistic goals. And that's basically the entire point of this strategy. Is it's a more sensible strategy than just holding it out until your profits go to zero and everything's gone and you don't have anything left. And yeah, because as we've seen from the past, the volatility of Bitcoin is unlike any other traditional financial market. But that's the trade-off that you get if you want the performance. And so if you want that performance and you want to profit off of the volatility, then DCAing in and DCAing out, in my opinion, is the best strategy. And so as the bull market comes to a close, and we see that really rampant upwards parabolic skyward sort of price action, that's when you want to be taking profits, and that's when you want to start being fearful when others are greedy. And what the really useful indicator of this, I guess, is the fear and greed index. So that's a really good index to gauge how the market is feeling on that day. And so you're basically playing at how the really big players who own most of the money in the space think. So they want to obviously screw out all the other institutional traders and all the other big holders of money, I guess. And they're going to be taking profit when the retail traders like us are greedy. And yeah, so don't be fooled, I guess, and make sure you're patient, take risk off your table, and make sure that you always keep your cool and make sure you stick to the plan. Sticking to the plan is very important, and that's hopefully what I'm going to be able to do. So setting yourself hard goals, adjusting to your risk tolerance, DCAing out, that is sort of the thesis as to how I'm going to approach this end of bull market. And past that, who knows? I'll be making another video probably on how I'm going to accumulate during the the very long bear market phase that might ensue after this bull market. But yeah, I'm looking forward to taking some profits, and I hope you are too. And I hope this video has been educational for you. And yeah, I'll see you guys in the next video. Bye.